So this is an emerging segment, and just about maybe 2-3% of the market is moving in that direction. And you're right in saying that there are not too many players. There are a lot of imported tires also. But we see a very strong emerging trend amongst two-wheeler customers who were primarily commuters or users of two-wheeler for business in smaller towns. Now there's a segment that is emerging which is into leisure biking. They're getting to cruise with their communities, and they're not alone. Moving along the highways, weekend drives, and many other kinds of drive, and longer drives also. And in some cases, people are getting to adventure also. They're traveling off-road, they're traveling into northeast, into Uttarakhand, etc. So and there is adventure sports coming in, which is you saw the supercross and doing around the city, a weekend thrill kind of thing. So to cater to this emerging trend, we thought this is the right time to invest in a manufacturing facility in Chennai and launch this product which we've recently done. This will grow as a proportion of the whole market, and OEMs are also joining the trend with more bikes sporting this kind of tires. So I think it's initially we will focus on the domestic market, and motorcycle steel radials have a good market outside India as well. 2-3% saliency is there today, but this could go up to high single digits in as fast as 3 to 4 years. So 2-3 capabilities and strengths we have built over the period of time, which is relevant for these emerging segments. One is the attachment of the brand to the concept of safety. Safety, whether it's slow speed commuting or high speed leisure biking or adventure, safety is key in two-wheeler because you are exposed, right? If there's any one brand which is associated with safety, it is CEAT, relatively speaking. Then we have the distribution muscle. We have about 50,000 plus sales touch points, and which is expanding. We'll keep expanding this. And it's not just the number, but it's how we do it, right? And then a significant OEM presence. The brand, the attachment to safety, the distribution, and the sales force capability to sell that, which is unique to CEAT. So these are, I think, strong assets in the domestic market. And therefore, whenever we go into a new area, for example, motorcycle steel or EVs, which is also coming up as a new trend, so we encash on this strength and then find our new customers where they are located and service them accordingly. No, I think we are a B2C company. We focus on the consumer, and we focus on the truck consumer also. But yes, we have a smaller presence in terms of market share in truck bus radial. We are more B2C in passenger and two-wheeler. In two-wheeler, it is just that we started earlier, we succeeded earlier. And passenger, remember, is a multi-cornered market. It's a fragmented market. There are 7-8 brands which are very strong in the passenger segment, unlike the two-wheeler market where there are much lesser number of brands which have the bulk of the market share. The market structure is different. In passenger, about 20-21% market share means you get market leadership, right? It will not happen in two-wheeler market. So we were always focused on passenger. We are a very close number 3 in terms of ranking in passenger market, and our aspiration is to get to market leadership in passenger tires in domestic market as well. So there again, we are moving with the market. We were very strong in the entry-level cars and hatchbacks, which is how the Indian car market grew. And the market is moving towards SUVs. Very clearly, 50% of the vehicles sold were SUVs. People are traveling more. They're going longer distances. People are not flying, but they're going by road. They're not going by train. So we are catching on to that trend, and the brand persona will also move along with the customers. So we will invest in 2 things. We have the highest spend in R&D in the industry in India already, and we will continue to invest in R&D, and we'll continue to invest in marketing as well. So these are the 2 engines of growth which will take us forward in four-wheeler also. So Our export saliency is currently about 19% of our total sales, and we would like to push this up to about 25% in 2-3 years' time. And this will come primarily from passenger car radials and agriculture radials. That is another growth engine that we have, and followed by truck bus radials. So these are the key arrowheads in the export market where we are investing. We are developing local marketing mix. It's not export per se. That's why we call it international business. And there are selected geographies such as Europe, LATAM, US, and the product range is developed locally, basis the local customers' requirement. The marketing mix is local. We are putting up local team members also. So it's local replacement market strategy.
Manufactured tires in India.
Manufactured in India. So we want to focus hard and raise our saliency to about 25%. Two-wheelers, there are markets which are very big. We would like to understand whether we have a right to win, and we can get whether we can get a significant share profitably. So we are looking at some of the larger markets in two-wheeler as well, and once we will do a lot of experimentation there first, and once we are sure about our right to win, we might commit resources to two-wheeler exports, international businesses also. So this year and next year is a continuous, the projects which are on, which is agriculture radial project in Ambernath. So there will be spent on that. There will be the truck bus radial plant at Chennai. There is a small capacity coming up there. So we will spend on that next year. Then there is some downstream finishing of expansion at Chennai for passenger radial. Then some downstream investment in two-wheeler at Nagpur. So all this will be part of that capex, and there is some regular capex of 200 to 50 crore every year for molds, for factory debottlenecking, refurbishing equipment. So that will also continue. Digitalization in retail business, our dealer interface is already digitalized. Even the 50,000 outlets that we say, that entire thing is visible to us every day online at any point of time. So it is digitalized. The supply chain to the last of the 55,000 outlet is digitalized, with visibility at all points. Pricing, stock, movements, billing, everything, right? Then our CEAT Shopee is an exclusive store where we shall look at more digital interfaces with our customers. We are also going to develop capabilities in CRM, state-of-the-art CRM, where we engage with customer directly. Our direct to customer business is also significant in the passenger categories, two-wheeler and four-wheeler. So there will be more investments. Already we are strong, but we would like to understand the newer technologies and have more efficient and effective engagement with customers directly. Yeah. So it's shaped up very well. In Frankfurt, we have the tech center. It has increased in strength, and we have different capabilities now that is being developed through the tech center in all facets of R&D, whether it is testing, whether it is material development. Sustainability is a big thing that we have to push for within the organization and for the customers. A lot of sustainable technologies do get talked about and developed in Europe. So we have a direct interface to that as well. Then, of course, customer interface with European OEMs. That's also much better progressed once we have a tech center in Europe. So on all these fronts, I think it has been beneficial, and we are very happy with the progress so far. So we never had the vision of winning the Deming Prize. I would say we had the vision of being the externally most customer-obsessed company, and internally highly frugal, efficient in meeting the goals that our customers want us to meet. So we started with the TQM journey, which we internally branded as QBM, Quality-Based Management. And in that, unlike many other manufacturing companies who just focus on one part of the organization, typically one plant they would go and incorporate TQM, We in the early days realized that's not going to work to great leverage. So we looked at the entire company, right from the CEO's office to all plants to supply chain to sales, marketing, entire organization going the TQM way. Yes, some parts of the organization does better than the others, definitely, so in that case, you focus on quality, safety, morale, cost, delivery, everything, and everything improves together. While doing this, we came across this Deming Award, which recognizes company who have done good progress and which hold promise of delivering better returns for all stakeholders. So in 2017, we challenged the Deming Award, we got it. In 2023, we challenged the Deming Grand. So I would say it has come along the way, and it continues even after 2023 when we got the Deming Grad. So I think we have lots to improve, and we were never the perfect company. We are never the perfect company now. So that is the essence of QBM, is that you figure out how you can improve perpetually and continuously. We have a specific goal on sustainability, which is medium-term goal, which is reducing our carbon footprint by 50% by 2030. This we designed this in the year 2022. We have a good visibility of this journey. We are doing many things in terms of energy generation, energy distribution, and energy consumption to reduce the energy per metric ton of production. It is specific, but the bigger goal is to reduce energy consumption as a whole. So we measure it in gigajoules. Right now we are in specific, like per metric ton, how much we are reducing. We are reducing in double digit every year, percentage, okay. Plus this energy we are switching to renewables. In the factory, about 1/3, 35% is already through renewables in manufacturing plants. This is going to go up to 48 to 50% very soon. So that's the second part. Third part is all other resources like water consumption also we are focusing on, plastic consumption we are focusing on. These are all getting reduced by high single digit to double digit kind of percentage in absolute terms over the previous year. Then our tire itself is an energy consumption when it's put on an automobile. So focusing on the rolling resistance of the tire, which will enhance the battery life in EVs and reduce the fuel consumption by way of petrol and diesel, is also a way of sustainable development. Finally, the tire itself, how much of the component of the tire is sustainable, made of sustainable materials. So there is a lot of research and that's going on around the world. We are connecting up with academic institutions and research outfits. Our Germany Tech Center is heavily invested into finding new materials which are much more sustainable. So we have a target for improving the sustainable component also to 40% of a tire from about 32-33% right now. If you ask anybody in CEAT, he will say the same thing, because ours is a very shared vision which everybody has co-developed. Our first milestone is to reach $2 billion turnover. We are number one in two-wheeler. We want to maintain that position. We want to reach market leadership in passenger vehicles also in India. And we want our international business to be 25% of our overall turnover. So broadly, that is the vision that everyone in CEAT will tell you if you ask them.